a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about aerospace and defense ETFs. Aerospace and defense stocks and ETFs have been rising lately, and in fact, they have done quite well compared to the broader indexes this year. And that is mainly because of rising geopolitical tensions. And as we know, the Russia Ukraine war shows no sign of a quick resolution. It continues, it has been going on for so many months. And then North Korea has increased its saber rattling lately. The country recently launched an intermediate range ballistic missile on Japan. That was for the first time in 5 years. And then North Korea and South Korea recently, they have been firing warning shots at each other at the sea border. China-Taiwan tensions are also on the rise, and they have flared up particularly after Xi secured his third term in office and also named two key generals in key roles. And he is trying to modernize China's military and increase pressure on Taiwan. And there are fears that China may invade Taiwan, and that move may be countered by Japan and US and other Western countries. And in general, these rising geopolitical tensions and military ambitions by countries like Russia and China, they have resulted in a need to increase defense spending by the US and its European allies because they want to counter military ambitions of Russia and China. Now, midterm elections are now just a few weeks away, and recent polls suggest that we may get split control of Congress after November, after midterms. Well, these polls are usually not correct, so we don't know what is going to happen. But in general, both parties support increasing defense spending, and if there is a gridlock in Congress, defense is an area which may continue to benefit, unlike many other areas that could not get increased spending. Looking at slightly longer term picture, we know that middle class in emerging countries, particularly India and other countries, have been rising, and that would be a key source of rising air travel demand. So just as these are aerospace companies too, so slightly longer term outlook looks good with the rising spending in emerging markets. Now, there are three main ETFs that focus on aerospace and defense stocks, and I wanted to show you those three ETFs. So the first one that I'm highlighting is the most popular. It is the iShares US Aerospace and Defense ETF. Ticker symbol is ITA. As the name suggests, it holds US domestic aerospace and defense stocks, has a market cap weighting scheme, expense ratio of 39 basis points, and quite popular with 3.8 billion in assets. To learn more about this ETF, you can go to the code page on Zacks.com. You can read our articles, research reports. Using the link, you can go to iShares webpage for this ETF. And you can see that it is down on, it was almost flat for the year, whereas the S&P 500 index is down about 21%. And if you look at the holdings, you will see that it is top heavy with companies like Raytheon, Lockheed Martin, Boeing, Northrop Grumman. These are the top holdings and account for a significant portion of the portfolio. Now, these stocks, like particularly Lockheed Martin, Northrop Grumman, they have done quite well this year. Both are up almost 30% year to date, and that is the reason why this ETF has done quite well. Now, the second one that I'm highlighting is slightly different in its weighting scheme. It is the Spider S&P Aerospace and Defense ETF, ticker symbol ZXAR. Uh, this also holds domestic aerospace and defense stocks, but they are equally weighted. So, due to that equal weighting scheme, it slightly tilts towards smaller companies away from those giants in the space. This is the cheapest, though just slightly less than ITA. A 35 basis points expense ratio, 1.2 billion in assets. Again, you can go to the quote page on Zacks.com, and from there, the external home page, see what it does, and you can also look at the holdings. So you will see same companies like Lockheed Martin, Northrop Grumman, but you will see many other smaller companies too, and they are all almost equally weighted at the time of quarterly rebalancing. Everything is brought to equal weights. The third one that I'm highlighting is by Invesco Aerospace and Defense ETF, ticker symbol BPA. This takes a slightly broader definition of aerospace and defense. This is also the most expensive of the three, with 58 basis points expense ratio and 1.5 billion in assets. Again, you can go to the quote page and you can go to the external home page. So you will see what kind of companies it holds, companies that are involved in development, manufacturing, operations, support of US defense, homeland security, and aerospace operations. If you look at the portfolio and see what it holds, so you will see same companies but slightly different rating scheme, and you may see some security focused companies as well in the portfolio. Now, on the last slide, I have the comparative performance of these three ETFs. Now, the two ETFs, ITA and PPA, which focus more on the larger companies in the space, they have done much better because, as I mentioned, companies like Lockheed and Northrop have outperformed this year. So these two ETFs are almost flat for the year. The equal weighted ETF has also outperformed the S&P 500 index, that is down about 14%, whereas the S&P 500 index, as I mentioned earlier, is down 21% year to date.
Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything, and we will see you next week.